pictures of her being put in the garbage.
We can agree on that.
The hour 10:15 having arrived, we'll call the House Tax Committee to order. And of course, there will be no order as far as the order of the bills. We're going to mix them around. We're trying to help members get to places they need to be other than here. So with that, well, nobody would want to be any place but here, but as my mother taught me, God rest her soul, sometimes you just have to live with disappointment. Okay, so Representative Elkins moves the minutes of April 9th, 2025. Any additions or corrections to the minutes? Hearing none, all in favor say aye. Aye. Opposed say no. Motion prevails. Thank you, members. We're off to a good start here. We're going to start off with the Quam Nadeau bill, House File 912. Welcome to the Tax Committee. And I will move House File 912. And I do not see an amendment, so it looks like we're ready to go. To the author of the bill, please describe your bill for us.
Thank you, Mr. Chair. This would make Minnesota the 49th state to have this type of a program with a confidential ruling letter. So basically, when there's more complex, whether it's inheritance, it's a business transaction, etc., you'd be able to do a confidential letter, and the commissioner could give you a ruling so they could do the taxes appropriately, avoid any misunderstandings, fines, all those complications. Alaska is the only other state not to have this process. Even the IRS has it. There are a couple of testifiers that could explain the detail, but simply it's just a common sense way to make it easier and to avoid complex tax situations.
Thank you, Representative Quam. Let's go to the testifiers. Let's go to Melissa Tape. If you could please give us your testimony, and then we'll have a Chris Martin, and then a Gino Fragmito. And is there anyone else from the audience wish to testify on this bill? Okay, we'll start out with Ms. Tape. If you please state your name and who you represent for the record, please.
Yes, good morning, Mr. Chair, committee members. I'm Melissa Tape, the Director of Appeals, Legal Services, and Disclosure at the Minnesota Department of Revenue. Thank you for the opportunity to share some concerns with the private letter ruling program that would be established under this bill. Specifically, I will discuss concerns regarding the timeline, the procedural effect of the precedential effect of the program, and the resources needed by both the taxpayer and the department. First, the date by which the proposal requires the program to be established, which is January 1st, 2026, is not practicable. The administrative rule that is to be promulgated to establish the program will be complex, and it will take time. For content, the IRS has over 50 pages of procedures about their private letter ruling process. The rule will need to be researched, a process created, then the rule will need to be written with drafts circulated, etc. This will all take time beyond the few months provided in this bill. Next, under the proposal, the private letter ruling issued would have no precedential effect for anyone other than the person or entity who requested it. Those who read the redacted private letter ruling that was issued to another taxpayer would likely have questions about whether their facts are the same or different from those in the letter. Additionally, by the time they are reviewed by another taxpayer, the private letter rulings may be outdated by a law change or a court ruling, which could confuse or complicate its interpretation. Alternatively, the department currently has multiple ways it provides guidance to taxpayers. These are things that all taxpayers may rely upon, unlike the private letter rulings. The department has issued over 400 revenue notices since statutory authorization on a wide variety of topics, which may be relied upon by all taxpayers. The department issues additional forms of guidance to relay information to relay information and positions to taxpayers. Using sales tax as an example, the department has issued 87 fact sheets and industry guides. In the past 2 years, that division has hosted 56 classes serving 5,200 taxpayers. Additionally, in 2024 alone, the Sales and Use Tax Division has answered 15,785 emails and 46,907 phone calls. Next, the private letter ruling will be expensive, both for the taxpayers and the department. Only sophisticated individual taxpayers and businesses are likely to be able to afford to put together a submission. Most will probably require professionals such as a CPA or a tax attorney to assemble and articulate the required facts, prepare the request, and answer questions from the department. This will be expensive. Next, for the department, it will require significant resources to create and maintain a private letter ruling program, including devoting significant legal and policy resources to create a process, research, write, circulate drafts for input, etc. This will be significant in terms of extensive time and human resources needed to efficiently and effectively maintain a private letter ruling program. The bill does not contain an appropriation to cover these expenses. An appropriation is necessary to hire experienced tax attorneys to draft the initial rule, as well as staff the unit with additional experienced staff attorneys, and also train them so once the program is established, the department is prepared to process and respond to private letter ruling submissions. Additionally, to help fund the program long-term, there is no indication of how much the agency would be allowed to require for a private letter ruling fee. The Internal Revenue Services fee structure begins at a couple $100 and includes fee amounts well over $100,000. To rely on a structure that could bring in small fees for several months to sustain the salaries for the level of experienced attorneys necessary to be prepared to handle the complex requests within a capped response timeline is risky and unsustainable. Where there is no guarantee of the volume or complexity of requests submitted, the ability to pay the salaries for experienced attorneys to draft private letter rulings is uncertain. For example, if several complex requests are submitted at one time, multiple attorneys will be needed to draft rulings within the 60-day response period. It is then possible that for the following several months, there could be fewer or less complex requests submitted. The attorneys who responded to the earlier complex requests would likely respond to the less complex requests quickly, but the fees would likely be insufficient to cover their salaries. The department would be potentially need to lay some of those attorneys off. If layoffs occur and the more complex requests are made, the department will be understaffed to respond to the requests. It is not possible to post a position, interview, onboard, and train someone in time for them to draft a private letter ruling within a 90-day period. These are just a few ways the fee-based program is unsustainable. Ultimately, it is unlikely that a specific or capped fee amount would cover the actual costs incurred in hiring additional experienced tax attorneys to research and respond to the private letter ruling requests. As discussed earlier, this is a program that will almost exclusively benefit individuals or businesses that have complex or complicated issues or fact patterns. These are the groups that already have the resources for and access to experienced tax professionals to advise them. Devoting department resources for this group may have the effect of diverting resources away from the agency's efforts to educate all taxpayers, not just a select few. Thank you for the opportunity to testify.
And thank you very much for your testimony. Any questions for Ms. Tape? Okay, thank you very much.
Thank you.
Let's go on to a Chris Martin I'll let you identify yourself. Thank you, Ms. Tape. Thank you. Please state your name and who you represent for the record, please.
Thank you, Mr. Chair. Mr. Chair, my name is Chris Martin. I'm a director at the accounting firm Ide Bailey. We are a member firm of the Minnesota Society of CPAs, and we advise businesses and individuals on Minnesota and other state tax matters. I do come before you in support of House File 912, As tax practitioners, we use published state letter rulings as a tool to provide tax guidance for our clients. Even taxpayers themselves will often search topics from other states related to their business or tax issue to see a state Department of Revenue's position. We've recently assisted our clients in requesting letter rulings in New Mexico and Washington, and we search weekly for letter rulings that are published in other states, such as Iowa, Illinois, Texas, New York, just to name a few, in order to assist our clients. Unfortunately, we don't have the same opportunity in Minnesota. I do want to share an example of how a letter ruling program would benefit taxpayers, the department, and result in sound tax administration. So first, imagine a business owner who is unsure if she should be charging sales tax on a particular product or service that she is selling to her customers. Her product is part of a newer technology. Perhaps it includes a service or a software component along with a tangible product, and it doesn't quite fit neatly into the department's fact sheets. Her options currently are to collect and remit sales tax, perhaps overcharging customers a sales tax that her competitors are not charging, or decide not to collect sales tax and run the risk of spending time and resources defending an audit from the department. If she were to lose the audit, the assessed sales tax she did not charge would come out of the business's bottom line, plus potentially interest and penalties. Requesting a letter ruling from the department on its interpretation of the taxability of her product and receiving the department's support and reasoning gives her business clarity and certainty. This particular taxpayer could rely upon the ruling from the department rather than guessing on the department's position, and it ensures consumers are charged the appropriate amount of sales tax. One of the department's arguments is that this program will only benefit those who are well-off taxpayers with resources who can request letter rulings. I would disagree with that it may be well worth it for the business owner in my example to pay a fee and to request a letter ruling in order to get clarity versus running the risk of not collecting sales tax and facing a potentially six-figure audit assessment down the road. Others in her industry may also search for this topic and benefit from the same guidance at no cost. So while others cannot rely upon the letter ruling as precedential, and I don't know of any other state that does have precedential letter rulings, it would be better guidance for other taxpayers who are searching these topics. It would be better guidance than what we're currently receiving right now. In administering all of Minnesota's taxes, the department should have the level of expertise needed, whether our state has a private letter ruling program or not. The effort associated with responding to a letter ruling request would, in many cases, also save the department time and resources currently spent on audits, appeals, and litigation. I don't believe my viewpoint is unique among tax professionals, CPAs, and lawyers. While no doubt there are details of the program to be worked out regarding timing, fee structure, et cetera, in conversations with my colleagues and our clients, Minnesota businesses and individuals are wanting more clarity and certainty in determining how to file and pay their Minnesota tax. Thank you, Mr. Chair.
Any questions for Mr. Martin? Chair Gomez.
Thank you. So we just heard from the Department of Revenue, who said that administering this would be a major strain on their time and resources, and then you just said, this will save the department time and resources. I'm just kind of trying to understand what exactly you're trying to do here, when literally the people who would administer this program, we just heard from them 2.5 minutes ago about that very issue. So I guess I just would want our testifiers, our professionals who get paid to do this, to ensure that they're sharing accurate information with the committee. Thank you, Mr. Chair.
Thank you. And it was a statement, right?
I think so.
Okay, let's go on. Thank you, Mr. Martin. Any other questions for Mr. Martin? Let's go on to Gino Fragnito. He is the Director of Government Relations, Minnesota Society of CPAs. Please state your name and who you represent for the record, please, sir.
Thank you, Mr. Chair, members of the committee. I'm Gino Fragnito, and I'm the Government Relations Director at the Minnesota CPA Society. And we do support House File 912 and thank the authors for bringing it forward. Minnesota has a voluntary compliance system, and taxpayers want to do the right thing and deserve authoritative guidance from tax administrators. Creating a private letter ruling program for Minnesota is a positive step towards enhancing tax administration and promoting taxpayer compliance. This legislation is in line and shares a common theme with another bill that'll be heard before the committee today, the Mobile Workforce Bill. Both of these bills create certainty and transparency for taxpayers. Additional guidance created by House File 912 would increase certainty and compliance and allow taxpayers to obtain clarity before engaging in transactions, resulting in better compliance and fewer disputes. It would improve tax administration by creating consistency for both the taxpayer and tax administrators while also promoting uniformity. Even though a private letter ruling is specific to one taxpayer, it can provide a great deal of information for others with similar positions. Creating a ruling program and joining 48 other states in the federal government that have some form of structured tax guidance would be a great service to Minnesota taxpayers who are trying to do the right thing. The current guidance offered through revenue notices doesn't scratch the surface on the guidance taxpayers need to voluntarily comply with a tax code that gets more complex each year. By implementing the guidance in Minnesota, we are aligning with best practices in tax administration, reducing litigation costs, and saving time and money for everyone. And Mr. Chair, I would note that we heard earlier that the department has issued over 400 revenue notices, but if I look back over the last 10 years, there have been a total of 48, and there are a lot more requests or information that is needed by taxpayers based on conversations I've heard and based on what individual taxpayers are telling us in terms of guidance that they would like to be able to have a definitive position when they go to file their tax returns. Thank you, Mr. Chair.
Thank you, Mr. Fragnito. Any questions for the testifier? And does the department have anything else they'd like to say? I mean, we had the department up earlier, so we're good there. Okay, questions for members? Let's go to Chair Gomez then.
Thank you, Mr. Chair. So first of all, the small business owner that Mr. Martin referred to, I would suggest instead of cutting a check to Mr. Martin, instead they call 651-282-5225, which is the public-facing phone number for businesses to call the Department of Revenue and get their questions answered. This is a very basic question that Mr. Martin was referred to, and absolutely not the kind of thing that you would need a private letter for. You know, I also just want members to note the testimony that we just heard from the Department of Revenue. Chair Davids asks almost every time we have a bill up in front of our department if, you know, that's not in the governor's budget, whether or not they wish to share any comments. 90+% of the time, the answer is no. This is an item that's not included in the governor's budget. And yet they have such concern about this proposal that they offered very detailed concern for several minutes about this proposal. You know, this is just a change that benefits and is advocated for by the wealthy and big businesses and those who benefit materially from their aggressive and relentless and continual pursuit of tax avoidance strategies. You know, when we talk about how corporations and the wealthy use their ample resources to erode our tax base, to gain benefits from our tax code that regular people have no hope of benefiting from, this is exactly the kind of thing that we're talking about. Members should not support this bill. Thank you.
Thank you very much, Madam Chair. I'm going to, any other questions for members? I'm going to take a little different approach on this bill. Chair Quam, I think it's a great bill, and it's not just for the uber-rich billionaires, it's for every citizen in the state. And it does beg the question in my mind just a bit that why do 48 states do this and Minnesota and Alaska don't? This is a needed service to be provided, and I've never quite figured out why the department's so against this, but small business owners, individuals, when they have a question, they want to lock down the answer. That's not a tax avoidance strategy, hopefully not in many cases. I suppose it could be in some cases. But the taxpayer wants to know, what are the rules here? Just tell me, and I'll do them. And that's what your bill does, Chair Quam, and I think it's a good bill. And we'll go from there. You want to wrap it up there, Chair Quam?
Thank you, Mr. Chair. And the first thing that comes to mind is I have confidence in our DOR personnel and capabilities. And if 48 other states and the IRS have been doing this, we can plagiarize the best of their techniques and have a wonderful program. But the idea you have to have dedicated people to do this, this overlaps with the same capability and aptitude that people that are involved in the audits and other things that they're already doing. So it take up some of the bandwidth there. But what it does is prevents the burning of bandwidth on the audits and court cases and et cetera. So the worst I see out of it, it's a zero-sum gain. But you're doing it up front and avoiding time through the courts, so it should take less time. But again, I have confidence in the people that we have in the Department of Revenue, that they're just as capable as the people in the 48 other states and the IRS that have been doing this, and it's common practice. So I hope the chair and the committee see that Minnesota is just as capable as those 48 other states. Thank you, Mr. Chair.
And thank you, Chair Quam. I'll renew my motion that House File 912 be laid over for possible inclusion in the omnibus tax bill. Thank you to Representative Quam, Chair Quam, and your testifiers. Let's now go to House File 2006. This is a Joy bill, and it looks like we have an amendment. Okay. Oh, yeah, he can, okay. Okay, let's see, where it is here? Item 4. Okay, would you like to move your bill, Vice Chair Joy?
Thank you, Mr. Chair, Madam Chair. Yes, I'd like to move this bill to be included in the possible inclusion of tax omnibus.
Thank you for moving the bill. Now, Vice Chair Joy moves the H200682 amendment. Is that your amendment, Vice Chair Joy?
This amendment came from the Office of State Auditors, just some suggested language on them, and I guess I would have nonpartisan go through it if they want to. Thank you.
Okay, yeah, okay, it's not directly from the author, so who would like this from nonpartisan? Mr. Cole, Mr. Cole.
Mr. Chair and members, the bill as originally introduced would have extended the deadline by which transferred increment under the temporary authority that the legislator granted in 2021 could be spent until 2025, but did not extend the deadline by which construction had to occur to qualify for those expenditures. So this bill would also extend the deadline for the expenditures for 2027, provided that a amended spending plan were submitted. So on 1.3 of the amendment, this would also require an amended spending plan if you wanted to take advantage of the deadline extension. And then the changes on 1.5 to 1.12 would effectively require that interest on interest on transferred increment would be treated in the same way that increment normally is. This is kind of the default assumption under the TIF Act, that interest on increment is increment, so this would just be a clarifying change.
Okay, do you want to move the amendment, or do you want it, or don't want it?
I'll
Okay.
move the amendment, yep.
Okay. Whose amendment is it? Okay. Okay, Vice Chair Joy moves the H200682 amendment. Any further discussion? Hearing none, all in favor say aye.
Aye.
Aye. Opposed, motion prevails. The bill before us is now amended. We have a list of testifiers we're looking forward to hearing from. The first one is Jason Nord, and then let's go Kyle Makarios, and then let's go Mr. Griffith, and then we'll just go in order, Mr. Hunt and Mr. Masick. So please state your name, who you represent for the record, please, sir.
Sure. Mr. Chair and members, my name is Jason Nord. I'm the TIF Division Director at the Office of the State Auditor. And this bill is a bit of an alternate proposal to what we had offered and Chair Davids that you had been kind enough to carry for us, where we were just seeking some clarifications to the current law. And with the A2 amendment, those clarifications have been incorporated. Our proposal did not extend the duration for expenditures, and that's not something that we have a position on. We leave that up to your discretion as a committee. But we appreciate the clarifications that were added by the A2 amendment, and I'm available for questions if anybody has any.
Okay, any questions for Mr. Nord? Okay, thank you very much. Let's go to Mr. Makarios, and then Griffith, Hunt, and Masick. Please state your name, who you represent for the record, please, sir.
Good morning, Mr. Chair and Madam Chair. My name is Kyle Makarios, and I'm here today on behalf of the Minnesota Building and Construction Trades Council. We represent 70,000 union construction workers across the state who work for thousands of Minnesota companies. We strongly support Representative Joy's bill to briefly extend TIF flexibility to cities for 2 additional years. We are particularly excited about this bill because of the significant impact on construction jobs that it will have in Bloomington and on the next phase of the Mall of America. Since its initial construction, the Mall of America has been an outstanding partner to the building trades. Nearly every day since we first broke ground over 30 years ago, there have been union construction workers building the various phases of the mall, doing tenant build-outs, or performing maintenance in the building or the amusement park. The Mall of America may be the longest-running continuous construction site in our state, and they have been excellent partners with our unions. This bill will allow the mall the time it needs to put financing in place for its next phase, and we are excited to help them build it. The proposed Mystery Cove Water Park will be a direct construction investment of $325 million and will put hundreds of our members to work building a great amenity that will boost tourism and bring even more people to visit us here in Minnesota. We're proud of our longstanding partnership with the Mall of America and encourage this committee to support this bill. Thank you, Mr. Chair.
Any questions for the testifier? Thank you very much. Let's go to Bill Griffith, Greg Hunt, and Holly Masick. So, Mr. Griffith, please state your name, who you represent for the record, please, sir.
Mr. Chair, members, Bill Griffith, I'm representing Mall of America. I'd like to just defer my time to the city testifiers. I'm here to answer any questions that members may have on the project.
Okay, thank you, Mr. Griffith. Mr. Hunt.
Good morning, Mr. Chair, committee members. I'm Greg Hunt, Economic Development Manager for the City of St. Louis Park. I come before you to express support for House File 2006. The City of St. Louis Park supports increasing housing opportunities for its residents, including policies that create and maintain housing, as well as aid and associated costs. The City of St. Louis Park, along with the cities of Minnetonka and Richfield, are currently included in the special legislation to allow for the deposit of unobligated pooled tax increment into an affordable housing trust fund to facilitate the construction and preservation of affordable housing. Our city has been extremely successful in utilizing the temporary special legislation to access almost $5 million and construct over 400 units of affordable housing and preserve another 400-plus units of affordable housing. As we speak, we are looking to utilize unobligated pooled tax increment to help facilitate a $150 million mixed-use, mixed-income TOD project that would include 77 housing units, of which would have, some of which would have deeply affordable rents. In St. Louis Park, we've been particularly focused on expanding housing opportunities, especially for those most vulnerable households, expanding economic opportunities, as well as creating and preserving affordability around our future light rail stations. We very much value TIF as a financing tool, using it judiciously to support this work. These projects would not happen in our community but for the use of TIF, and that is why the use of this temporary TIF is so very important. As the city of St. Louis Park, Minnetonka, and Richfield have seen great success in utilizing the special legislation, we're very supportive of offering this resource statewide. Thank you for your time this morning, Mr. Chair, and we encourage the committee's support of House File 2006.
Thank you, Mr. Hunt. Are you related to Ethan?
No, sir.
Okay, just wondered. To the next testifier, please state your name and who you represent for the record, please.
Right. Good morning, Mr. Chair, Madam Chair, and members. My name is Holly Masick. I'm the Port Authority Administrator for the City of Bloomington. The port is the economic development arm of the city. The City of Bloomington strongly supports the extension of the timeline for spending increment authorized under the Temporary Transfer Authority. In 2022, the city authorized the use of assistance for the construction and development of an entertainment-focused venue in the South Loop District of Bloomington, which will play a key role in supporting the continued success of Bloomington's hospitality industry, the surrounding South Loop neighborhood, and the wider region. As you've heard, this is specifically for a water park that is related to Mall of America. The South Loop District, if you're not familiar, is a highly visible location situated between highways 494 and 77, just south of MSP Airport and just north of the Minnesota Valley Wildlife Refuge. The area is not just for entertainment, it is rapidly becoming a distinctive urban center in Bloomington, developing into a remarkable area where people want to be. It's added 1,900 housing units since 2015, and there are direct public transit connections to downtown Minneapolis and the rest of the region. We have several large employers in the area, including Health Partners, Polar Semiconductor, Skywater, SICK, and TKDA. But it is also home to Mall of America, which is an essential part of our economy, attracts over 32 million visitors annually, comprises 12% of Bloomington's tax base, and over the history of the mall is estimated to have an over $2 billion economic impact on the state. Both hospitality and brick and mortar retail were greatly impacted by COVID-19, and the authorized increment will be dedicated to supporting a project which keeps these industries healthy in Bloomington and for the region. An entertainment project was identified as key for bringing new and returning visitors to the area, helping Mall of America diversify its offerings beyond brick and mortar retail in an era of online shopping, and maintaining a thriving hospitality industry. But since 2022, approvals of this project, real estate development in the area as well as the metropolitan region has slowed substantially due to increases in financing and construction costs. Extending the timeline for spending increment would allow for completing important development and growth of the South Loop that attracts new visitors to the city and region, keeps a regional tourism asset strong, supports new business generation and commercial development, and enhances the quality of life for all of our residents and residents of the region. We truly appreciate your consideration of our request, and I'm happy to answer any questions you may have.
Thank you so much for the testimony. Any question for the testifier? Okay, thank you very much. Again, anyone in the audience wish to testify for the bill or with concerns? Okay, thank you. Member questions? Chair Gomez? Okay. Okay, with that, we'll let the Vice Chair Joy wrap it up.
Again, I appreciate the time, and I hope we can move this through. Thank you.
Thank you. Representative Joy, Vice Chair Joy, moves House File 2006 as amended be laid over possible inclusion in the omnibus tax bill. Thank you to you and your testifiers. Let's now go to Marshall. Representative Swedzinski. So Chair Swedzinski moves House File 3140. I do not see an amendment to your bill, Chair Swedzinski.
Thank you, Chair Davids and all the chairs in the room, and we appreciate House File 3140 to be heard in front of the Tax Committee. This is more of an extension of a TIF, so the TIF has already been moved forward. Just looking for a little bit more time on things. I have the mayor of Marshall here and the city administrator as well to speak more in depth about the bill. And with that, we'll turn it over to you. Just introduce yourself for the committee and look for your testimony.
Thank you,
No,
Representative.
where are we here?
Mayor.
Oh, the mayor, Your Honor. Okay, please present your testimony.
Okay, thank you, Mr. Chair. My name is Bob Burns. I'm mayor of the city of Marshall, a position I've held for the past 33 years. In the previous testimony, you heard discussion about the extension of the unallocated tax increment that was extended until December 31st of 2025. Our request with this bill is to extend that until December 31st of 2027. We greatly appreciated the ability to extend the unobligated increment, but we are in a position where the project that we are working on simply is not ready to be expended by that deadline. And specifically, that project was for affordable housing. And the purpose of that, of course, is to provide housing that's needed for our growing workforce in southwest Minnesota. With me, if it is okay with the chair, with me today is our city administrator, Sharon Hansen, who can provide a little more detail about the proposed project. But again, the request is for the extension, which currently would expire December 31st of 2025, to extend that until December 31st of 2027.
Okay, before we do that, Mayor, how long, I didn't catch how long you've served as mayor?
33 years so far, but
Do you believe in term limits?
no, we don't have those in Marshall.
Do you, I don't, Representative, I do not.
50 years.
And I've been very clear about it. It's just interesting, 33 years mayor, I've been in the House 33 years, so that's, neither of us believe in term limits.
Yeah, so
Let the people decide is what I say. Okay, please state your name and who you represent for the record, please.
Mr. Chair, Sharon Hansen, City Administrator for the City of Marshall. I just want to explain briefly the situation we're in as a follow-up to what the mayor has stated. We did have a housing development that did make application to the Minnesota Housing Finance Agency to the Low-Income Housing Tax Credit Program in 2023 and in 2024. Both of those years, due to strong interest in the program and competition throughout the state, Minnesota Housing Finance did not select this Marshall Housing project. Thus, we are in a predicament where we are nearing the deadline of the TIF extension that is due to be expended December 31st, 2025. They do plan on making another application as soon as it is available, but due to the waiting, uncertain economic conditions, avoiding the rush to making a decision on economic development, we are requesting an extension of 2 years to December 31st, 2027. And I thank you for allowing us to testify, Mr. Chair, and I'll be happy to answer any questions.
Well, thank you for being here. Any questions? First of all, let's go to the audience. Anyone else wish to testify for this bill or with concerns? Okay, then let's go to member questions. I think it's pretty straightforward. Representative Smith.
Thank you, Chair. This is for the bill author. This was asked earlier, and I kind of want to get to the bottom of this. Are you related to Ethan?
Ethan?
Chair Swedzinski.
I maybe have stepped out of the room. If Representative Smith would like to clarify.
Now, how many members understood that? A couple. Boy, that was just like, whew.
I think it was worth it.
Okay.
No further questions, Chair.
Okay. Thank you, Representative Smith. Okay, any questions for members for the Chair Swedzinski or the testifiers? We'll go to Chair Gomez.
Oh, I'm just a question for Mr. Cope, actually. So, because this is a little, well, this one, and obviously the Joy Bill is sort of the blanket one, but then it's similar to the Oakdale TIF request, I think, from Lily that we heard last week, maybe. Is the difference that, because this project like hasn't started, right? And the Oakdale project is like almost completed. Is that the difference between the two of these?
Mr. Cope?
Mr. Chair, Representative Gomez, I don't know the difference between the projects. I'll say the difference between the legislation, this is very comparable to the Lilly bill. And it would effectively do the same thing for the city of Marshall that Representative Joy's bill would do as a change to general law, with the exception that the Marshall legislation and the Oakdale legislation extend the deadline to spend transferred increment, but they would not extend the deadline to commence construction for it to qualify for payment under the temporary authority.
Chair Gomez?
Okay, I think that helps. I guess we see a number, like, we see TIF projects that ask for exceptions to rules when a project hasn't started yet, and that's just kind of strange to me, I guess. So I'll just be, we'll be bringing this in and taking a look, I think, at the specific local projects and kind of, see what makes sense. But thank you, Mr. Chair.
Thank you, Chair Gomez. Any other Representative Lee?
Thank you, Chair. I guess this is another question for Mr. Cope, and I don't know if he can answer it, but I'm just curious if there are similar TIF bills like this that are related to the Minnesota Housing Finance Agency, and if like these kind of projects, if these kinds of situations have happened before.
Mr. Cope?
Mr. Chair, Representative Lee, not that I know of. I think the situation that Ms. Mazik brought up is unique to this temporary authority in that it expires in 2025. So if they transferred increment for these purposes, and then subsequently were unable to attain the low-income housing tax credit, I don't know that that sort of situation could have been replicated outside of the existence of the temporary authority before now.
Okay, thank you.
Representative Lee?
Thank you.
Any other questions? Okay, Chair Swedzinski, if you'd like to wrap it up.
Thank you again. Thank you, Chair Gomez. Thank you, Chair Davids, for your questions. And we look forward to working with the various chairs on if answer any questions offline if that's necessary. But we appreciate your consideration for this TIF extension for the city of Marshall. Thank you.
Chair Swedzinski renews his motion that House File 3140 be laid over for possible inclusion in the omnibus tax bill. Thank you. And if you get a chance, could you, I'll talk to you offline on the Mustangs, right?
Yes.
Southwest State for a hat. I need a hat, Mustang. I'll buy it. I'll see if it's online first. So, thank you very much. I love it when people don't believe in term limits. I just absolutely love that. Okay, item next. Where should we go next? Representative Swedzinski, why don't we go to your next bill?
Good.
You're kind of on a roll
There's a lot
here.
of work to stand up, so I appreciate you willing to call me again.
Sure. Okay, Representative Swedzinski moves House File 2360. Representative Swedzinski now moves H2360A1, the amendment. A discussion on the amendment, Chair Swedzinski, is that yours?
Yes, that is my amendment, and that gets the bill in the shape that I would like the bill to be discussed before the House Tax Committee.
So the gentleman from Lyon moves the HF 2360A1 amendment. Any discussion? Hearing none, all in favor say aye. Aye. Opposed? Motion prevails. We now have the bill before us as amended. To your bill as amended, Chair Swedzinski.
Thank you, Chair Davis. Thank you, Chair Gomez. Thank you, members. This bill, House File 2360, ultimately just creates a state-level program that builds upon really the successful federal program that's been implemented. The big difference between this bill and what the feds do is primarily, obviously adding money to focus in these particular areas, but also add money so that we can focus it not only in the metro, which is the primary focus of the federal program, but allow at least 50% up to our bill is a $200 million bill, that $100 million of that would be focused in greater Minnesota. That's one of the biggest changes of the bill to add to this, and that's why House File 2360 is part of it. Yeah, it's a 12-month-long program. Our goal really is to really drive investment throughout the state of Minnesota, not just in the metro area. I believe there's a map within your packet that's got, those particular dark areas are areas of purple. Because we like to save money, we didn't print them in color. So that's the bill. I do have some folks here that would like to speak on behalf of it. And, from other highlights, from an oversight standpoint, the CDE, so they must be approved to invest in the program and receive federal funding. And this just allows the state to participate on the state level to help guide those funds where we seek and where we feel that some investment could be beneficial. So with that, thank you.
Thank you, Chair Swedzinski. I have two testifiers, an Alex Stepanek and a Jason Wobema. I hope I did that right, is virtual from Hibbing. Alex, please state your name and who you represent for the record. Please, and from the audience, is there anyone else who wishes to testify on behalf of the bill or with concerns? Okay, please state your name and who you represent for the record, please.
Thank you, Chair Davids, Chair Gomez, members of the committee. My name is Alex Stepanek. I work for a company called Advantage Capital. I'm here in support of House File 2360. Advantage Capital is an impact investor that for the last 30 years has been investing in small businesses in low-income and underserved communities through programs like the New Markets Tax Credit. In front of you today, as Representative Swedzinski referenced, this is a state-level take on a federal program that's been around since about 2000. Every year, the U.S. Treasury awards $5 billion to community development entities, CDEs like Advantage Capital and about 300 others across the country that invest specifically in small businesses in parts of the country where capital just traditionally doesn't flow. A few of the projects in Minnesota that have already received federal funding, the historic Coliseum building on Lake Street, George Modular Housing in North Minneapolis, Red Lake Trading Post in Red Lake, and Climate by Design HVAC in Owatonna. This is a program that since 2007, what states found was that the money was not being dispersed evenly by state. And so some states were getting a lot and some states were getting a little. And so in 2007, these states that were getting a little started to pass state-level programs to attract more funds, more of these funds to their state. It's been the only proven way to bring more of these funds to a state to make sure that the small businesses and nonprofits that are trying to grow but can't find the financing to do so have access to the capital they need, and they have a disproportionate amount that comes to that state that passes the program. One thing of note, the 14 other states that have passed programs like this, none touch Minnesota. So passing a program like this is a real differentiator for attracting more of these funds to the state. The nearest state that's done it is actually Nebraska, and they passed their program in 2012. Prior to that, they were 49th in the country at attracting these funds, and after passing their program, they shot up to second in attracting these funds. And so with that, the question you should probably ask is, so what? That growth is beneficial. Where's the money going? Who's it helping? I'll tell you one very quick story from Nebraska. There was an entrepreneur in North Omaha that started a call center because she wanted accessible jobs available to the people where they live and where she grew up. And she had about 50 employees and wanted to buy out her co-owners so that way she could grow the business, and they didn't want to grow. And she went to 6 different banks, and they all told her that they couldn't get her the financing that she needed. She found that financing, about $1.8 million, through the New Markets program that the state passed, and was able to grow her business from 50 employees to 100. The coolest story in that is that she found that a lot of her employees were having trouble getting to work because bus routes didn't run to where her office was. So she went and bought a bus and went and started picking up people so that way they could continue to keep the jobs that she was providing. And then within 18 months, she paid off her 5-year term loan, 3.5 years early, and then continued to grow her business to where now it's 400 people in North Omaha. And she's the largest minority woman-owned business in the state of Nebraska. She's got an incubator where she helps other women start and grow businesses. And she was recently appointed to the Federal Reserve Board in Kansas City. And she's an incredible entrepreneur. And this program isn't, the program doesn't do that. It's an entrepreneur that does all of that. But this program gets her and entrepreneurs the financing they need, where they need it, when they need it. And with your support, program like that could really help these businesses in Minnesota. I'd be happy to answer questions. Our other testifier is an entrepreneur that has to run to another business meeting, so I'd ask you'd hear his testimony as well. and then I'd
Let's go
answer.
there first, then. Let's go to Jason. If we could get Jason on here.
Yeah. Good morning, Mr. Chair. I'm Jason Wabama, the owner of Advanced Machine Guarding Solutions in Hibbing, Minnesota. Appreciate you letting me testify on the new market tax credit. So I believe that the new market tax credit focuses on areas that lack the financial backing they need to thrive. This helps ensure that Hibbing isn't overlooked by larger investors, giving local entrepreneurs like me a real chance to grow our business, strengthen the community, create good paying jobs. The new market tax credit would help bridge the gap between local entrepreneurs and the access of traditional funding methods and what's needed to grow successfully our business. So we started in 2021 with myself as employee number 1. We're actually up to 22 employees. And like Alex was mentioning, we're struggling to find working capital cash to double our size of our company. We want to go from 22 employees up to 50 employees in the next 2 years. And in rural Minnesota, it's very difficult to find that. And part of the reason we're struggling to find that is the reason I built this company was to eventually turn it into an ESOP and create wealth here on the Iron Range. I'm open for any questions.
What does your company do?
We make steel guarding for robotics and automation.
Okay.
So we actually, based in Hibbing, we actually use all US made steel. So not only do we create jobs here, but we also buy from our local mines here in Hibbing.
How are the Hibbing Blue Jackets doing?
For hockey or
Hockey.
For well, you saw in state they won the first game but lost the next 2. So,
But you know what? They were there, weren't they?
they were there, and it's
They were
been a
there.
while since they were there. So,
Any questions for either of the testifiers for members? Chair Gomez? Any-
Yeah, thanks, Mr. Chair. I guess I just, some of the changes to this bill from the previous version that I saw are not in a direction that I would support, I guess. I kind of think that there should be a little more conversation before, you sort of arbitrarily decide that half of the funds go to one region versus the other, not based on the economic output of the 2 regions, but just sort of seems a little bit arbitrary. Adding the 5-year carry forward sort of makes this a more permissive kind of tax credit to use, and the cost is obviously an issue, the increase in the allocation, but we probably don't have money for this year, but appreciate the ongoing conversation on this. I know it's an effort that's, enjoyed support from both parties in the past, and so it will be in the mix as we move forward, but, probably not enough room in our budget for $100 million for this year. Thanks, Mr. Chair.
Thank you very much. Chair Gomez, to the author, if you'd like to wrap it up?
Sure. So thank you, Chair Davis. Thank you, Chair Gomez. And just if you take a gander at the fiscal note, we do push out some of the costs out into future years. So the first cost incursion would be 2028, 2029. It's a 7-year program, and then it'd be $20 million a year moving forward past that point. So it does take care of some of the issues of tails and current issues within the budget dynamics that we're finding ourselves in. And the unique part of that is by structuring it in this manner, we can get within a 12-month period all the beneficial investment up front. And so, oftentimes, I think that would be a large selling point to the bill and why it would be important and why we don't necessarily have to set the funds aside within this budgetary dynamic. And I think that allows us to potentially look at that, and I'd be happy to work with Chair Gomez if there's some massaging that can be done on this bill that would garner some support from across the aisle. I'd be happy to have those conversations. And also the beautiful part of this bill, that can be scalable. So, you know, if the budget diameters, we find ourselves in a better situation, we'd be happy to add to this. So we could add more money to it, but we could also potentially scale it back a little bit to make it a little bit more palatable for the committee. So thanks again for your time. Appreciate your support.
And thank you, Chair Swedzinski. Chair Swedzinski renews his motion that House File 2360 as amended be laid over for possible inclusion in the omnibus tax bill. Thank you to you and your testifiers.
Thank you, Chair.
Okay, item next, we'll go to, I guess the last two are David's bills. Let's go to House File 2048. I will move House File 2048. And then Mr. Clayman, are we okay on that date on the, we're okay? Okay. Okay, so I'll move 2048, so it's before us. Members, what happened was a constituent came to me and had a situation where they had made a deposit. Their CPA told them to make a deposit in their IRAs for the year 2022. And the checks were submitted in 2023. One had in the memo that it was for 2022, the other one did not. So the company credited the one IRA contribution for 2022 and the other for 2023. The company is notified that no, they both should be for 2022, and they refused to move it to 2022. So I did a little homework myself here, believe it or not. And if you go to 2023 instructions for forms 1099R and 5498, you will find that it says corrected form 5498, which we needed to do here, or they needed to do in this case, and said if you file a form 5498 with the IRS and later discovered there was it had an error on it, you must correct it as soon as possible. Not a may, or you can if you want to. It says must correct it. It was not corrected. The IRS says you got 3 years to correct it. So this bill simply would have insurance companies correct their errors, as they have to do anyways. So I would just open up for any questions. Anybody want to testify on the bill with concerns, or hopefully no concerns, but any member questions? Representative Elkins.
Yes, so this basically would conform state law to federal law?
What it would do, Mr. Claim, if you could describe what it would do.
Mr. Chair and Representative Elkins, so for a contribution that was made in calendar year 2023, if notification was provided within a 3-year window, which corresponds roughly to the 5498 window that Chair Davids mentioned, then the insurance company, the annuity contract provider, would be required to redesignate that 2023 contribution for tax year 2022. And that would, and then that would allow that contribution to count towards the tax year 2022 federal deduction for that retirement contribution. That would then flow through to the state.
Okay, thank you, Mr. Clayman. Representative Elkins? Any other questions? Okay, I'll renew my motion that House File 2048 be laid over for possible inclusion in the omnibus tax bill. Thank you, members. Item last, let's go to House File 950. That's a David's bill. Okay, are there any, okay, we have some witnesses on, or testifiers on this one. So, Mr. Williams, if you could describe what the bill does, and then we'll get the folks up to testify.
Chair Davids and members, so House File 950 pertains to certain non-resident employees who work in the state. Under current law, non-residents are required to file a Minnesota income tax return if their Minnesota source income was greater than the standard deduction amount for a single taxpayer. So that's estimated to be $14,950 in 2025.
Under House File 950, non-resident employees who work in the state of Minnesota would be exempt from the state income tax on their compensation in Minnesota if they work in Minnesota for 30 days or fewer. And the bill also exempts employers from a requirement to withhold taxes from the wages of individuals who work in the state for 30 days or fewer, and additionally sets rules for sort of exempting employers from penalties if they sort of comply with record-keeping notifications and the rules established in the bill.
Okay, let's go to our testifiers. First is Douglas Lindholm, Special Counsel, Counsel on State Taxation, who is with us virtually. If you please state your name, who you represent for the record, please. And
Yes, thank you, Chair Davids and Chair Gomez. My name is Doug Lindholm. For 25 years, I served as Executive Director of COST, the Council on State Taxation in Washington, D.C. I now am Special Counsel to that organization, working on special projects, of which this issue is one, and it's been one we've been working on for over 15 years now, in states and in Congress. Let me start by saying that the mobility of our national workforce is one of the greatest assets we have as a country. Every day, hundreds of thousands of workers are sent by their employers on business trips across state lines. Now, the vast majority of those trips are very short in nature, far less than the 30 days that this bill contemplates. The problem is that in nearly half of the states, as soon as that employee sets foot in that state, that employee is required to file by statute a personal income tax return, and the employer of that employee is required to file withholding on that amount. And this applies to any employee or any employer, including unions, governments, nonprofits, teachers, first responders, all are liable if they trigger that statute. Now, in actuality, very few traveling employees comply with these statutes. And I'll be the first to admit, I probably travel to 20 states a year for a day or two here. I do not comply. And I've had several revenue commissioners tell me that, indeed, they don't want taxpayers to comply because they would have to process thousands of small dollar returns for which the employee would just then take a credit against their non-resident state. And Minnesota is even tougher because Minnesota has a dollar threshold. And in many cases, employees who are compensated on a bonus plan or through commissions or receive other perquisites such as a company car, you don't know whether the time you spend in Minnesota triggers that filing threshold until the end of the year, until you know what your full compensation is. Very difficult to do. Now, what this bill does is it solves this in a very efficient and very helpful way. First of all, it offers a 30-day safe harbor for non-residents before they have to file a personal income tax in Minnesota. Now, there's no free lunch here. If that employee triggers that 30-day threshold, then they are liable for income as of day one. Having it at 30 days is a significant enough threshold that if you're the type of employee that has a job that's going to take you to one state for more than 30 days, you'll know it. And you'll be able to tell your employer that they should start withholding on you as of day one in that state. The second part of this is that instantly what this bill does is it brings hundreds of thousands of traveling workers into compliance, because whereas they may have come in for a day or two and not filed, now they're covered under the safe harbor. And finally, the bill has a reciprocity provision in it that says that if Minnesota provides a 30-day safe harbor for non-resident, or residents of other states that come in to work in Minnesota, they will only do so if those other states also provide the same reciprocal protection against Minnesota residents who go to those states to work. So it is this bill really does, it brings a lot of taxpayers instantly into compliance. We're trying to get this bill in every state, and the reciprocity provision encourages other states to enact it. It's good for the state, it's good for the business community, and it's good for the national economy as well. So I encourage your support of this legislation and happy to answer any questions. Thank you.
any questions for Mr. Lindholm? Okay, thank you very much. Let's go now to Gino Fragnito. And then we'll, after Mr. Fragnito, we'll go to Gavin Hansen. Please state your name and who you represent for the record, please, sir.
Thank you, Mr. Chair, members of the committee. I'm Gino Fragnito, the Government Relations Director at the Minnesota CPA Society, and I'm here today in support of House File 950 to reduce the compliance burden on both employees who may work a few days in multiple states and employers who may be required to withhold income tax for a few days worked in another state. Mobile workforce legislation, as Mr. Lindholm stated, has stalled in Washington, but the problem continues and has resulted in states looking to make changes at the state level rather than wait for a federal solution. House File 950 would reduce the compliance burden and increase the efficiency of administrations by creating that 30-day safe harbor for filing requirements, and an individual working outside their home for those 30 days or less would not need to file that return. By excluding compensation received by qualifying non-resident individuals from gross income, it reduces the administrative burden of withholding and filing requirements for short-term work in Minnesota, and also would reduce the administrative burden on the Department of Revenue. Work preferences have changed significantly in the last 5 years with increased access to remote work and increased complexity with tax laws. House File 950 promotes workforce mobility while exempting non-residents who work in Minnesota 30 days or fewer. It's important to remember this would only be allowed for those individuals with a reciprocal state. Reducing complexity for temporary workers could provide economic benefits by attracting more skilled workers to Minnesota for short-term projects. House File 950 acknowledges the increasing rate of remote work and short-term multi-state assignments while adapting Minnesota's tax system to align closer to these modern work patterns, making the state more attractive for businesses and workers in a gig economy. Thank you, Mr. Chair.
Thank you, Mr. Fragnito. Any questions from members for Mr. Fragnito? Please state your name and who you represent for the record, please, sir.
Thank you. Good morning, Chair Davids and Chair Gomez and committee members and staff. My name is Gavin Hansen, and I'm the Fiscal and Economic Policy Director for the Minnesota Business Partnership. MBP represents over 100 business leaders and executives who collectively employ nearly 500,000 Minnesotans across a wide range of industries, contributing significantly to America's headquarters economy. Thank you for the opportunity to testify in support of Chair David's bill, House File 950. This bill addresses an ongoing issue faced by out-of-state employees who travel to Minnesota for brief work-related purposes, such as a quick business trip or quarterly meeting, only to become subject to tax withholding requirements. Additionally, it places an undue burden on employers who risk penalties and creates administrative challenges for the Department of Revenue. House File 950 provides a well-considered solution to this issue, offering clarity and simplicity. The bill establishes a 30-day threshold for work-related travel, ensuring that employees and employers avoid unexpected tax complications while making compliance more straightforward for the Department of Revenue. Importantly, the language in House File 950 has been carefully vetted over the course of nearly a decade. As Minnesota continues to serve as America's headquarters economy with many leading companies based here, it is essential to recognize the increasing mobility of today's workforce. Executives and employees often live and work across multiple states, making practical and fair tax policy like that in House File 950 more important than ever. This legislation eliminates unnecessary administrative burdens, prevents gotcha moments for employees and employers, and is a common sense solution. I urge your support for House File 950.
Thank you, Mr. Hansen. Any questions for Mr. Hansen? Okay, I'd like to go to the department. Would you like to testify on this? I'd like to get a private letter ruling on this one, if I could. I'm just kidding. Chair Gomez. Or, I'm sorry, let's have you wrap it up. Representative Lee.
Great, thank you, Chair. This is actually probably a question for Mr. Williams. I just wanted to see if you could clarify something. And so my understanding is if you earn income in Minnesota, you are required to pay income tax. But I heard a lot of references to conferences and like coming in for a quarterly meeting. Can you just clarify whether that's actually something that's taxable?
Mr. Williams.
Chair Davids and Representative Lee, under current law, if you are sort of compensated on an annual basis, so you potentially earn a salary and then you work a certain number of days in Minnesota, then you would potentially have to figure out based on sort of the pro rata share of your salary that was earned for days worked in Minnesota, and then sort of use that to calculate how much your Minnesota source earnings is for the purposes of that exemption we talked about that's tied to the single standard deduction amount.
Representative Lee.
Great, thank you, Chair. That's really helpful. And yeah, I think for me, this is an interesting question, but I'd also just point out for members that, you know, I think that here, like the problem that we're trying to solve is not, you know, just the, I guess, small town like mobile workers. I think when we're thinking about people who come into Minnesota and work here, oftentimes the workers that face this problem are like consultants from places like BCG or you know, Bain. They come here, they come work for our clients. They maybe come here for like a week and they fly back home, and then they come back the next week and they go back home for the weekend. And so I understand the arguments about administrability, but the reason why like these consultants are able to come here is because they work for a firm which have accounting departments, and they have an infrastructure to really, you know, deal with all the paperwork, right, of coming in and working for some of our largest companies and clients here, because, you know, those companies are not hiring people here locally for whatever reason. And so just want to like make sure that, you know, that's clear about like who we're talking about and the kinds of workers. Thanks.
Thank you, Representative Lee. Any other questions before we go to Chair Gomez? Chair Gomez.
Thank you, Mr. Chair. So just trying to understand this, because we had our testifiers talk about a worker who was here for a couple days. Both testifiers referred to that. I mean, so currently, if you came here for a couple days and you made $5,000 a day, would you have any tax liability? If your time here was, you know, if the money that you earned in Minnesota was less than that $14,950, would you have any tax liability in Minnesota?
Mr. Williams?
Chair Davids and Representative Gomez, no. So then you'd be exempt under current law based on that standard deduction amount I mentioned.
Okay, so.
Chair Gomez?
Thank you, Mr. Chair. So just want to say, like, nobody in the gig economy, which was what we just heard referred to, is going to be making more than the standard deduction in less than a month of work in Minnesota. Under this bill, if somebody were to come for 2 days and make $1 million a day as a contractor, would they have to pay any Minnesota taxes on that if this were made law?
Mr. Williams?
Chair Gomez and, Chair Davids and Chair Gomez, I think if they are here for less than 30 or fewer days under the bill, then they would be exempt from a filing requirement and exempt from tax.
Right, so,
Chair Gomez?
thank you, Mr. Chair. So any amount of money, if somebody came here for 29 days and made $50 million, they would have no tax liability in Minnesota. I mean, I just think this is sort of a $3 million solution in search of a problem, personally. And, you know, I think that there are just, this sort of seems like, oh, you know, it's just a little tweak to our laws, but, you know, it potentially could sort of provide an income tax exemption to people making a lot of money in our state. And I think we just need to think about whether we want to do that. We also heard about this would only apply in a reciprocal state. So I'm wondering what other states have adopted this policy.
Mr. Williams?
Chair Gomez and Chair Davids, that's correct. So the language about reciprocity is in clause 4 on lines 2.3 through 2.5, and I should probably amend my comments earlier that exemption for someone, you know, making a large amount of income in Minnesota would only apply if their residency was in a state that had a reciprocity agreement. I've seen a map, but I don't remember specifically how many states or if any other states have adopted this exact model legislation. So maybe the Mr. Lindblom from COST has that information available.
Yeah, Mr. Chair, if I may.
To the gentleman virtually.
Thank you. This is an issue that's been percolating in Congress for about 10 years. Didn't get through Congress, so we took this effort to states. There are about five states now that are looking at a 30-day threshold. Illinois, Indiana, West Virginia, Montana, and Louisiana has a bill to, they're 25 days as a compromise, they're going up to 30. Alabama has a bill present. Vermont allows 30 days through regs just for withholding. Arizona and Hawaii allow 60 days just for withholding. So we are pushing this bill in other states. And to the comment about you can come in for 29 days and make millions of dollars, in most cases when that happens, the high earners are entertainers or football players or other professionals or persons of prominence who come in and get paid for a presentation. All of those are excluded. It is a good faith effort to make sure that if you come into the state and the reason you're here is because of your visit, like you're playing a football game, that you don't get the 30-day safe harbor. So there's a real effort to make sure that those high earners, and that's typically who they are not protected by this bill.
Right, Mr. Chair.
Gomez?
Yeah, I understand that this doesn't apply to people who pay the non-resident entertainer tax. I mean, frankly, it's like we're hearing, so there's 5 states that offer this reciprocity. So, where it's implemented, right?
Do we have a list of what states currently have this?
Yeah, I'm sorry.
You said those 5 states: Indiana, Illinois, Louisiana, West Virginia, Montana.
Mr.
Correct.
Linville? Are they the ones
Yes.
looking at it, or are they the ones that have it?
They have it. They've
Those 5
already
have it.
enacted it.
Right.
Okay.
Okay, so we're going to pay $3 million a year to have reciprocity with 5 other states for people who come and make more than $15,000 in a month. I mean, I don't know. I don't know if this is, I'll just say the Council on State Taxation is, an industry lobbying group that goes around the country and tries to, do their best to advocate for the interests of their members, who are the largest corporations in the world. And so this is, just another kind of little way to chip away at our tax base in Minnesota, and we need to be on the lookout for these kinds of things. So, thank you, Mr. Chair.
Thank you, Madam Chair. Any other questions from members? Or Representative Freiberg,
Yes?
did you have a question?
No, I didn't.
Oh, you didn't?
Yeah.
Not about Ethan Hunt or anything? Or?
No, I think we covered that pretty well.
I think we
Or
did.
like if, Mr. Chair, if
Representative Gomez.
we just want to ensure that Jefferson Starship is covered under the entertainer provision.
Representative Freiberg?
They will be coming to Treasure Island Casino in July, so I don't know, I assume they'll be here less than 30 days. But I imagine they're exempted by the entertainer tax.
Okay. I'm glad we got that cleared up. Any other questions for members on House File 950? Okay, then I will move that House File 950 be laid over for possible inclusion in the omnibus tax bill. Members, we have a meeting scheduled, and I believe Chair Gomez would have the gavel Tuesday, the 22nd, because we're the tax committee. We don't shut down till sine die, right? So Chair Gomez, it'll be your day. Any thoughts or?
We'll kind of be call the chair, I think, because we're going to be, when we get back from break, we will be obviously passing some of our budget bills. And so please stay tuned.
Thank you. Anything else for the good of the order? With that, good government all the time. We are adjourned. Thank you.